Tomorrow might look like a normal day, but it could quietly change the direction of the entire market. Crypto, stocks, risk assets, all of them are waiting for one thing, and almost no one is talking about how unusual this moment really is. Tomorrow, something happens that has basically never happened before. 2 U.S. jobs reports, released on the same day, October and November. Now here's why that matters. The U.S. jobs report is not just about jobs. Inside it, there is one number the Fed really cares about, the unemployment rate. Right now, the Fed's own projection is very clear. They expect unemployment to sit around 4.4% over the next 6 months. The last official reading, already 4.4%. Because of the government shutdown, October was skipped. Everything got delayed. Confusing, messy, typical. So tomorrow, all the focus is on November, and this is where the story gets interesting. If unemployment comes in slightly higher, not something dramatic, just higher than 4.4%, that single number could force the Fed to rethink its next move. As of today, markets are not expecting a rate cut in January. The probability is low, around 23%, so positioning is defensive. Expectations are muted, hope is low. But if unemployment surprises to the upside, even just 4.6%, those odds can flip fast. Suddenly January is back on the table, and that is when markets usually react the most. Not when everyone agrees, but when expectations are wrong. This is why people are quietly watching for a Christmas rally. Bitcoin does not need perfect news. It just needs the market to be caught off guard. If price holds, if jobs data disappoints, a move toward $105,000 is not unrealistic. Now zoom out for a second. Back in October, during the shutdown, many believed weak data would push markets higher. Instead, Bitcoin lost key supports. Weekly, monthly. That is when bear market narratives started to spread. And here is the irony. The data that was supposed to confirm that move was never released. Until now. Those delayed numbers are finally coming out tomorrow, December 16th. On the equity side, things are already fragile. The S&P 500 did not add MicroStrategy. Oracle disappointed. AI-related delays are starting to show cracks. Yes, AI companies are massive, but most of them are not profitable. Their valuations depend on the future, not the present. And when growth expectations get questioned, markets reprice quickly. That is why this week matters. The Fed has been waiting for clarity. Tomorrow, they get it. If unemployment drops, hopes for rate cuts fade. Markets lose their excuse to move higher. If unemployment rises, even slightly, everything changes. One more thing. The dollar is still weak. That matters, because it tells us this is not a confirmed bear market yet. Historically, markets rarely go straight down. They bounce first. They give hope, often right up to the 200-day moving average, before the real decline begins. So today, watch U.S. equities, the S&P 500, the Russell 2000. But tomorrow, watch the jobs data, because sometimes the market does not move when the news hits. It moves when expectations break.